How to qualify for a SBA loan 2023. So before we get started, make sure to hit that like button and also subscribe my channel. The Small Business Administration, SBA, is a federal government agency that offers small businesses counseling, contracting, and capital. One function of the SBA is to help America's small businesses secure the funding they need to operate and grow. A primary way the SBA does this is through the SBA loan program, which extends guaranteed financing to small businesses through participating lenders. What is an SBA loan? The SBA does not lend small businesses money directly. Instead, it sets guidelines for loans that are made by its partners, which include banks, credit unions, community development organizations, and microlending institutions. The SBA guarantees that a portion of these loans granted by these groups will be repaid, eliminating some of the risk for lenders. With an SBA loan, the SBA regulates the amount of money you can borrow and guarantees certain interest rates that are lower than what a bank would typically offer. For some borrowers, the lender may have been unwilling to provide a loan initially. However, when the government is backing a major portion of the loan, the lender may decide the risk is more acceptable. The SBA works with lenders to provide loans to small businesses. Reads the SBA website. The SBA reduces risk for lenders and makes it easier for them to access capital. That makes it easier for small businesses to get loans. SBA loan requirements vary based on the lender and the individual loan program. In general, however, you'll need to meet some basic criteria from the U.S. Small Business Administration, like operating in an eligible industry, and have good credit and strong financials to qualify for these small business loans. Here's what you need to know about SBA loan requirements and the application process. General SBA loan requirements. Regardless of your SBA lender or loan program, you'll need to meet a standard list of eligibility requirements, including business operations. Asterisk must be a for-profit business, officially registered and operating legally. Asterisk must be operating in an eligible industry. Asterisk certain types of businesses are ineligible for SBA loans, including firms involved in lending activities, any business whose principal activity is gambling in churches and other religious organizations. How do SBA loans work? SBA loans and lines of credit are similar to conventional business loans from banks. The process starts when business owners apply. Once approved, the borrower secures funding and then pays it back over time with interest. What do you need to be eligible for an SBA loan? To get an SBA loan, you're required to provide extensive financial documentation about your company to both the bank and the SBA. This allows the SBA to determine your eligibility and to see if the loan is a good fit for both the agency and your business. The SBA has different qualifications for each of its loans. While there are numerous loan types available, from international trade loans to veteran-focused lending programs, the most common SBA loans are the 504 and 7. Regardless of which loan you decide to pursue, there are some major benefits to getting an SBA loan. Costs of an SBA loan. Like other business loans, SBA loans come with costs, most notably interest. Borrowers pay several loan fees, including application fees, appraisal fees, if a loan is being collateralized by assets such as real estate, and perhaps a credit check fee. In addition to conventional fees, SBA loans have a guarantee fee. This is what borrowers pay in exchange for the SBA guaranteeing a portion of their loan. The guarantee fee applies only to the portion of the loan being guaranteed by the SBA. Benefits of an SBA loan. You can reap multiple benefits from an SBA-backed loan, including lower interest rates and longer loan terms. However, your situation will be unique to your business. The choice between an SBA loan and a conventional loan may come down to something outside of the conventional benefits list. Cale Gaston, president of Lendstream Small Business Finance, said SBA loans do a great job of helping lenders say yes to borrowers. He also noted that SBA programs provide better access to capital and credit enhancement for small business owners. For example, since the SBA guarantee lowers the risk in case of a loan default, lenders can provide funding when the down payment available is too low or the business's cash flow is not high enough for traditional lending options. 1. Apply through your local bank. This is one of the most common ways to apply for an SBA loan. Working closely with your local bank allows you to quickly get in touch with the SBA, as banks often have a designated employee or representative who deals directly with the agency and can help you get the process started. If you're working with a bank that you do business with regularly, it'll be easier to get your documentation submitted and work on the next steps. If you don't already have a relationship with a local bank and the banks you visited can't provide you with a loan option, there are other routes to finding the right lender for your small business. There are two main types of SBA loans you can get through a local bank: 7A and 504 loans. The 7A loans encompass standard business financing, while the 504 loans are geared more toward long-term real estate purchases. Within both these types are a few different loan products. You can talk with your lender about which one is right for you. These loans include standard term loans of varying sizes and more unique loan products, like the Builder's CAP line. 2. Visit a small business development center. Use the SBA website to find your nearest small business development center. These centers provide small businesses with more than just lending help, but it's often a great first step toward finding the right lender. 3. Use Lender Match. Sometimes you may not be able to work with a local bank or make it to your nearest small business development center. If that's the case, the SBA still has you covered. The SBA provides an online tool called Lender Match that processes your claim and matches you with several SBA-approved partners. You can find a match in as little as 2 days and start the funding process immediately afterward. Lower interest rates. As an example, the maximum interest rate on a 7A SBA loan over $50,000 is WSJ Prime plus 2.75%. That cap means you'll be getting a lower interest rate than standard banking interest rates. The rate is used to entice lenders, but it also entitles the borrower to offer a fair market rate. As of January 2022, the WSJ Prime rate is 3.25%. Add the 2.75% requirement, and you could get the best possible business loan at just 6% interest. That's well below what many banks offer small businesses, especially those that are struggling financially. Easier qualifications. Credit score requirements are lower with SBA loans than the standards for conventional business loans. If you meet the SBA standards, you can get a loan. This makes it a good option for new businesses and other companies facing financial hardship that could not otherwise qualify for a typical bank loan. By going through the SBA, you're establishing your credibility as a borrower. It also changes the vetting process so the bank is working with SBA to obtain and interpret your financial information. Longer terms. SBA lenders can provide longer terms as well. Instead of 5 or 10 years for a real estate purchase, with a balloon payment at the end, the lender can give 25-year terms, eliminating the balloon final payment or need to refinance every few years, Gaston said. For shorter-term assets, like equipment, terms could be up to 10 years instead of the usual 3 to 5 years. Longer loan terms mean you have more time to repay what you've borrowed, depending on your business's situation and the amortization schedule of your loan. A longer loan could be advantageous. It could provide lower monthly payments and give your business more flexibility down the line. Much like flexible payment options, this potential benefit is highly specific to your company's financial situation. What do you think about our video? Let me know in the comment section below. If you enjoyed this video, make sure to hit that like button. Also subscribe our channel before you go. Thank you for watching video.